The world is not merely volatile, it is on the brink. Picture this: the American flag planted defiantly in the frozen soil of Greenland, not by explorers, but by decree. President Donald Trump has doubled down, refusing to rule out force, vowing no going back, and threatening tariffs of 10 to 25% on 8 NATO allies who dare stand in his way. Denmark calls it blackmail. Europe braces for retaliation. The transatlantic alliance, once the bedrock of global stability, now cracks under the weight of imperial ambition reborn in the 21st century. And the markets? They are screaming. Just yesterday, Wall Street suffered its worst bloodbath in months. The Dow plunged nearly 870 points, the S&P 500 shed over 2%, the Nasdaq cratered 2.4%, erasing early 2026 gains in a single brutal session. The VIX fear gauge spiked above 20, whispering panic into every trading floor from New York to Tokyo. Asian markets opened in the red. European shares extended their sell-off. The dollar weakened as foreign investors quietly began the sell America exodus feared since last year's tariff storms. But while equities bleed, the true kings of chaos are rising. Gold has shattered records, surging past $4,160 per ounce, now flirting with $4,165 as terrified capital flees to the ultimate safe haven. Silver, the people's metal turned rocket fuel, has exploded to all-time highs near $95 an ounce, up dramatically on relentless supply deficits, green tech demand, and a global flight to precious metals. These are not mere rallies. They are lifeboats in a storm of geopolitical madness. Meanwhile, the crypto dream flickers in the shadows. Bitcoin clings precariously around $89,000, dipping below $90,000 amid ETF outflows and risk aversion. Ethereum hovers near 2,170s, battered by the same macro winds. In this environment, digital gold behaves like, well, risk and real estate. America's housing market teeters on a knife's edge, mortgage rates stabilizing around 6%, inventory slowly rising, pending sales ticking up, but affordability remains a distant mirage for millions. Trump's promised reforms to unleash supply loom large, yet the sector holds its breath, waiting for policy thunder from Davos. Today, all eyes turn to the Swiss Alps. President Trump arrives at the World Economic Forum, theme, a spirit of dialogue, to deliver what could be the speech that calms the storm or ignites a global trade war. Will he de-escalate? Will Europe bend? Or will the Sell America narrative become self-fulfilling prophecy? This is no ordinary market update. This is the pulse of a world remaking itself in real time, where tariffs become weapons, alliances fracture, safe havens shine, and every tick on the chart carries the echo of history in the making. Buckle up. The drama is just beginning. Today, we dissect it all. Stocks in freefall, precious metals at historic peaks, crypto on the ropes, geopolitical fault lines splitting wide open, and the housing market caught in the crossfire. Welcome to the edge of 2026. For stock market, U.S. stocks extended losses from the previous session, marking one of the sharpest declines in recent months. On January 20th, the Dow Jones Industrial Average fell 1.8%, shedding around 870 points. The S&P 500 dropped 2.1%, and the Nasdaq Composite declined 2.4%, the worst single-day performance since October. This erased early 2026 gains for the S&P 500 and Nasdaq. As of January 21st, the S&P 500, US 500, hovered around 6,831 points, showing a modest 0.5% rebound from the prior close, but remaining down over the past month. European shares, StoxX 600, fell further by 0.7%, while Asian markets opened lower. The CBOE Volatility Index, VIX, spiked above 20, signaling elevated investor nervousness. The sell-off stems from renewed Sell America fears, where foreign investors potentially dump U.S. assets in retaliation, echoing earlier tariff episodes. Trump's upcoming speech at the World Economic Forum in Davos is under close watch for any de-escalation signals. Broader uncertainty includes tariff threats and potential European bond equity sales. Despite the pullback, some sectors showed resilience, such as data storage stocks benefiting from hyperscaler demand. For gold and silver, precious metals are surging as classic safe havens amid geopolitical and trade risks. Gold hit fresh records above $4,865 per ounce, up around 1.9% recently, with spot prices near $4,852-$4,854. Silver reached all-time highs around $95 per ounce, peaking at $95.87, $95.89, up significantly year-to-date due to persistent supply deficits, industrial demand, e.g. green energy, and safe haven flows. Silver's gains have been particularly explosive, up over 200% year-over-year in some metrics, fueled by 4 consecutive years of global deficits and retail buying in China, India, and the Middle East. Analysts project further upside, with some retail surveys expecting gold above $5,000 in 2026. These rallies reflect a flight to safety as equities falter and bond yields rise. And for cryptocurrency, crypto markets show mixed performance amid broader risk aversion. Bitcoin traded around $89,000, $89,500, down from overnight highs near $90,000, $93,000, extending a recent slump despite earlier 2026 strength. Ethereum hovered near $2,173,000. The sector has been volatile early in 2026, with Bitcoin dipping below $90,000 at times due to ETF outflows and geopolitical headlines. However, some analysts remain bullish long-term, citing institutional adoption and potential Fed rate cut expectations. Broader crypto sentiment ties to risk appetite, with Bitcoin acting as a proxy, declining on tariff fears but holding above key levels like $88,000, $90,000. When it comes to geopolitics, the dominant driver is the Greenland dispute. Trump has doubled down, refusing to rule out force and threatening 10 to 25% tariffs on 8 NATO allies starting February-June unless Denmark agrees to sell. Denmark and the EU have rejected this as blackmail, with retaliatory measures discussed. This has revived trade war fears, strained NATO cohesion, and prompted a Sell America narrative. Trump heads to Davos for the World Economic Forum. Theme: a spirit of dialogue, where his speech and meetings could clarify policy. Other tensions include U.S. actions in Venezuela and broader global risks like geoeconomic confrontation, topping leader surveys. Oil prices remained steady despite tensions, offset by supply issues in Kazakhstan. Regarding real estate, the U.S. housing market shows modest improvement signs heading into 2026, with affordability easing slightly due to stabilizing mortgage rates and rising inventory. Pending home sales rose in late 2025, and experts forecast sales up to 14% in 2026 as rates average around 6 to 6.3%. 30-year fixed near 6.04, 6.15% recently. Inventory is increasing, more balanced buyer-seller dynamics, with price growth modest, 1 to 2%. Northeast markets may see stronger appreciation, while Sunbelt areas benefit from new construction. Challenges persist: high prices, limited new builds, and middle-income buyer constraints. Trump's potential housing reforms, e.g. boosting supply, are anticipated, though impacts may take time. Overall, 2026 appears transitional, more balanced but not fully affordable until later years. For broader market sentiment and outlook, markets are in a defensive posture, equities down, bonds fragile, U.S. 10-year yields around 4.29%, dollar weaker, and havens, gold, silver, Swiss franc, rallying. The VIX above 20 indicates caution. Key watch points: Trump's Davos address, any tariff escalations, Fed signals on rates, and European responses. While macro fundamentals, e.g. wage growth, cooling inflation, support gradual recovery, geopolitical risks dominate short-term. Investors are hedging via safe havens, with volatility likely to persist until clarity emerges. This analysis draws from real-time developments as of January 21, 2026, reflecting interconnected economic and geopolitical forces shaping asset classes today. This is no ordinary market update. This is the pulse of a world remaking itself in real time, where tariffs become weapons, alliances fracture, safe havens shine, and every tick on the chart carries the echo of history in the making. Buckle up. The drama is just beginning. Today, we dissect it all: stocks in freefall, precious metals at historic peaks, crypto on the ropes, geopolitical fault lines splitting wide open, and the housing market caught in the crossfire. Welcome to the edge of 2026.